Hey guys, Victor from TRADEPRO Academy, and today I've got one question for you. Have you ever wondered how you can get into the futures market and how you can trade futures? Well, don't worry, because today we're going to be answering all your questions, and in this video, we're going to go from nothing to getting into the futures market and trading the futures market. So the topic of the day is, how do you begin to trade futures? Now, there are a lot of steps and processes to go through, so we're going to outline our best alternatives and our favorite choices when it comes to trading futures and how you can turn into a successful futures trader. So first and foremost, we're going to jump into the definition of a futures contract. Futures contract is a contract between two parties that promises to buy or sell a good in a future time for a future price. So a producer back in the day would hedge his production to be able to sell it for a higher price just in case the price goes down, while the buyer would hedge against that and get the opposite side of the contract just in case price went up, so he could buy it from the producer at that lower price. Now, the most common futures are commodity based, so you've got oil, gold, there's also softs. But in the late 90s, we introduced the cash settled index futures, which are used for speculative purposes, for hedging as well, but also to make money, and that's what we do. So we use all kinds of futures contracts for speculation. The CME's then most successful product was launched, ES futures, the E-mini futures, and other equity futures in the late 90s. And since then, they've come up with an even more successful product, the E-mini micros, so equity micro futures. Now, we've talked a lot about those, but if you want to go check those out, we have a series on them. Go see what it's all about. It's a very, very low cost, low capital way of entering into the futures market. Now, equity futures are all cash settled, unlike some commodity futures. So like oil, if you let the contract expire, then you might get the physical oil barrels. Now, you wouldn't want that, and they'd be put in storage, probably in Cushing, Oklahoma or something like that. But equity futures, even if you do let them expire, they'll just be cash settled. You don't want that either. Now, Mark talked about futures expiration dates and the rollovers in a different video, so if you guys want more information, go check that out. But today we're just going to be talking about how you could get into the futures market from the base level, from nothing. So what do you need to ensure future trading success? The basics are a broker, data feed, platform, and education. So those are the four main steps that we're going to be talking about today. First, a very trustworthy broker. Now, there's a lot of brokers out there. There's a lot of futures brokers, which are mainly pretty trustworthy, considering that the CME is the centralized exchange for futures markets, but we like to go with AMP Futures. Now, AMP Futures is a great broker, very, very low margin and lower commissions. AMP Futures provides the data, so there's different types of data plans. We like CQG, there's also Rhythmic. Now, we go with CQG because we've experienced less problems, and you pay for these data sources separately. What the data does is feed the live data, so the live charts, the live level 2, the live DOM, everything live as it happens, all the live volume, all the live order flow into your software. Now, to trade futures, I highly recommend unfiltered data, so you can go tick by tick. Now, there's a huge difference between unfiltered data and time data. Now, here you will see what unfiltered data within a 5-minute time frame looks like on a 5-tick of the S&P. And here you will see a 5-minute chart, the same time period on a time-based chart. Now look at the difference, guys. So that's why you need a broker and a platform that has unfiltered data, such as AMP Futures that offers CQG and or Rhythmic. Now, both of these data sources are great, and they come at a fee of about $15 for CQG and about $30, $20, something like that for Rhythmic. Now, difference is CQG offers 10 ticks above and below on the DOM itself, while Rhythmic offers the full book. Now, how it works is your broker connects your data to your account. So generally, a broker and a data source could be combined, and they could have a partnership such as Market Delta and CQG. They're one of the same. However, there are platforms out there that accompany different data sources through different brokers. So AMP the broker, CQG the data feed through AMP, connected to your live account, and finally the platform where it all comes together, where you see your charts and actually place your trades, and all of that gets wired back into your broker through your data and into your account. Now, the platform that we choose to use is Sierra Charts. Sierra Charts has a plethora of data providers that you could choose from that are compatible with the software. Now, we told you two that we recommend. There are other brokers and other data feeds out there. However, we've experienced a lot of good things with CQG and some with Rhythmic. Now, Sierra Charts is just a general charting platform, which you will have to connect live data, otherwise you will not be able to trade, and you have to have a brokerage account connected to Sierra Charts. Otherwise, again, you won't be able to connect to live data and you won't be able to trade your account. Now, there are two levels of Sierra Charts, and I do recommend package 5 because it does have those unfiltered data points in which you can create footprints and you can look at the inventory heat map and stuff like that. It's just a better option. It's only about 30-ish US a month if you get a larger package. So if you get like a quarterly package, a semi-annually, or an annual package all in one, the price does decrease. Now, the next thing you'll need to start trading futures is capital, of course. Now, a lot of people may have the misconception that you need a large account to start trading futures, and people also might confuse it with the pattern day trading rule, in which you'll need minimum 25K to actually day trade futures. Futures do bypass that in the States, but in Canada, we don't really have the pattern day trader rule. So how much capital do you need to start trading futures? Before May of 2019, we might have suggested a few thousand, which may still be a decent amount to some people. But now with the most successful CME product, the micros, you will only need a few $100s in your account to access the future market. This could be considered as a beginner stage, a learning stage to transfer over to the minis. But even with a few $100s in your account and trading the micros, your account can grow if you are diligent, have a right community, have the right education, and are a pro risk manager. Now that we've established account size, even with minis, it depends on the margin. So that's what you have to consider when trading. So for example, we'll lay out 3 product margins and the account recommended to trade each. Now, first, the largest we do trade is oil. So you will be required $1,000 of margin to trade 1 contract of oil. Now, to mitigate getting diced up and whatnot, for a 1 lot of oil, we do recommend a $2,000 to $5,000 account, just to give us some cushion room, even $2,000 to $3,000. Next, we have the ES E-mini futures, the S&P 500 E-mini futures, generally with $400 of margin required to trade a 1 contract, so anywhere between $1,500 and $2,000 in your account to trade that E-mini would be recommended. Next is the micro ES E-mini micros. Now, it's the micro version, a tenth of the scale of the previous E-mini contract that I talked about. That means a tenth of the $400 in margin is $40 in margin. So technically you can trade micros, 1 contract of ES micros with just $50 in your account. But again, room for error. Let's bump that up to at least $100, $150 for that 1 contract. Now, we've got 2 last things here to mention. How can you become a successful futures trader, and how can you begin your futures journey? Now that we've laid out all the basics, next is a great trading education. Now, there's a lot of trading education, a lot on futures. However, obviously I would recommend TRADEPRO Academy. We have a very vibrant community of very, very friendly traders that trade together and they want to see others succeed. And it's not enough for me to make money, but I want to see everyone else in the community make money as well. I want other people to rejoice in what is trading futures. Now, an education and community is great. However, there's one vital thing that comes with trading futures successfully, and that's risk management. And what comes with risk management is a trading plan and consistency. So the number one thing you have to do is create a trading plan, a set of rules that you follow, and follow them to a T. Do not deviate, otherwise you may not get consistency. You have to manage that risk, and that's how you will gain consistency. Gains in futures trading are the rewards of managing risk. Now keep that in mind when trading futures. So now that we laid out all the basics for you guys, I hope you guys enjoyed this video. It's Victor from TRADEPRO Academy, and that's how you can begin trading futures with a small account or any account, it doesn't matter, but get that trading education first. Come visit us at TRADEPRO Academy and we'll hook you up. This is Victor from TRADEPRO Academy. I want you to hit that subscribe button, give me a like, and ring that little bell to notify you when we do go live each and every morning for our live morning market update. We'll cover the news and give you a little leeway into the trading day.